Howdy, everybody. Welcome to Liberty Call for Wednesday, April 9th, 2025. Hope you're having a fantastical day out there in the interwebs. Very nice day here in Colorado. I got summer clothes on. I got shorts, t-shirt. It's wonderful. It's not chilly or anything. And as soon as we're done here, me and our main security director, Jake, down here, we're going to go play some ball because he has some stinky farts. If you've ever seen Seinfeld where Kramer gives chili to the horse, he spent a week at the sitter, and they did a great job with him. But he probably was eating the other dog's food, and it's quite ripe the last couple of days. So, anyways, all right. Well, markets are roaring back after Trump hit the pause button on most tariffs, but Jack's Chinese import duties up 125%. The Dow, S&P, and NASDAQ all post their biggest gains in years, while China and the EU respond with retaliatory tariffs of their own. Dun, dun, dun. Meanwhile, Walmart leans into price cuts and bond markets catch a breather. So before we break all this news down, I need a favor from you. Yes, you in the purple shirt. I see you sitting there. Hit the subscribe button. Give me some thumbs up, like, share, subscribes, and hit that notification bell. All right, are we ready to get in the markets? I think so. All right, there's the button. There it is. All right, Dow Jones up 7.87%, 2,962 points, closed at 4608. S&P 500 up 9.35%, 465 points, closed at 5448. NASDAQ up 12.16%. Wow, that's a big number. 1,857 points, closed at 17,124. The VIX fell 35.99% today. It's at 3344. It fell 18 points. Canada up 5.42%, Brazil up 3.19%, and Mexico up 4.56%. Let's go to Europe. Germany down 2.96%, the UK down 2.92%, France down 3.34%, Netherlands down 3.33%, Spain down 2.22%, Italy down 2.75%, Switzerland down 4.3%, and Portugal down 2.85%. Russian exchanges are red because oil is falling. MOEX down 3.69 and RTSI down 4.39. Overnight markets, the Nikkei in Japan down 3.93%. Australia down 1.8%. New Zealand down 0.6%. In China, the Shanghai was up 1.31. Shenzhen Component up 1.22. China A50 up 0.29. DJ Shanghai up 1.5%. Hang Seng up 0.68. And the Taiwan weighted when it closed on the 8th was down 4.02%. Exciting stuff. Crazy day. I know I had a meeting about an hour ago with a friend of mine, and I printed his performance report on just a 1 year trailing, and it's kind of flat because the markets have been down so much they looked good a week ago or 2 weeks ago when the market had been rallying, but on a 1 year trailing, it was basically flat. And so when I emailed him, I'm like, hey, sorry, these reports are basically old news because the market went up like 5-6%, here in the late afternoon. So, anyways, all right, what are we going to next? I think we should do the market recap. Me too. All right. S&P 500 rallies as Trump pauses reciprocal tariffs for 90 days, excluding China. Those darn Chinese. They're just, I don't know what the Chinese have actually done, but the Chinese government, I think the Chinese people are probably good. Kind of like the Russian people are, decent. Most governments are evil. I think that's the big problem because the worst people go into government, gangsters, crooks. Is there anyone who's a decent human being that, works in government? There's a few. There's good people who work in these places. So, all right. The S&P 500 soared Wednesday after Donald Trump announced a 90-day pause on reciprocal tariffs, excluding China, allowing room for country-by-country trade negotiations and easing global trade war fears. Trump declared that while tariffs on China would be hiked to 125% immediately due to Beijing's, quote, lack of respect for world markets, reciprocal tariffs on other countries would drop to 10% for 90 days. The softened stance applies to countries that haven't retaliated, offering them a chance to negotiate. China, however, doubled down, saying it would raise tariffs on U.S. goods to 84% starting Thursday, because those Chinese goods are awesome. Let's see. Other notable tariff levels include 20% on the EU, 24% on Japan, 46% on Vietnam, 25% on South Korea, and 32% on Taiwan. Treasury Secretary Scott Bessent noted that over 75 countries have reached out to the U.S. seeking relief, viewing the 10% tariff as a floor versus last week's ceiling. Markets welcome the reprieve. Investors jumped back into tech stocks, led by gains in NVIDIA and a 16% surge in Tesla after Benchmark upgraded the stock to a buy. Alphabet reaffirmed its $75 billion investment in AI despite recent volatility, further fueling optimism in the sector. Delta Airlines rose over 6%, despite saying it won't reaffirm its full-year guidance due to ongoing tariff uncertainty. Walmart similarly pulled its Q1 operating income outlook, citing potential disruption from broad tariffs on Asian imports. The tariff policy shift brought much-needed relief to markets after days of turbulence, but uncertainty remains. With over 75 countries seeking exemptions and trade talks now on the table, the next 90 days will be critical in shaping the direction of U.S. trade policy and its economic impact. And in 3 months, we will probably be going through the same hand-wringing and consternation that we've been going through the last few days. I know. We just keep going through the same cycles over. You do this long enough, you just get used to it. You're just like, all right, well, here's what we're doing next. Is the Fed going to come to the rescue with a bunch of money? Well, here's what we need to do. If they don't, here's what we need to do over this way. So it's, again, experience has its privileges. Let's get to our next article here from Zero Hedge. WTI, which is West Texas Intermediate, extends losses after crude inventory build. U.S. production has dropped. Short article here. Oil prices tumbled to 4-year lows on Wednesday after escalating global trade tensions sparked fear of a worldwide economic slowdown, potentially reducing demand for energy. The drop comes amid pushback from China, Canada, and European Union against tariffs imposed by President Trump, raising concerns about the broader impact on global growth. Crude initially dropped sharply, though prices stabilized slightly ahead of official U.S. inventory data. The American Petroleum Institute, API, reported a small crude draw of 1.057 million barrels, while the Department of Energy, DOE, showed a surprising 2.55 million barrel build. How is that possible? You have on one side, it's $1 million or a million barrels one way, and then on the other, it's a 2.5 million barrel build on the other. I mean, aren't they using the same date? I mean, you would think they'd be close, or I don't know. Along with an increase at the key Cushing storage hub, gasoline and distillates, however, posted drawdowns. Adding to supply concerns, U.S. crude production slipped last week, though the Strategic Petroleum Reserve saw a build of 276,000 barrels. Market dynamics are shifting as futures curve has moved into contango, where futures prices are higher than the near-term prices, signaling weakening demand expectations. Analysts say this reflects growing anxiety over Chinese oil demand, which is crucial for global markets. On a positive note for consumers, falling crude prices suggest lower gasoline prices are coming soon, offering potential relief at the pump and adding to disinflationary pressure in the U.S. economy. And I mean, looking at the statistics, energy inflation has actually been in the red most of the last 12 months, which has probably been nice for those who are feeling the pinch elsewhere, at the grocery store and everywhere else in their lives, that the price of gas and heat in your home has not been rallying with everything else. So it's just kind of stayed where it's at. So staying at 3, say your gas, like here at the gas station or the grocery store where we shop, diesel and regular gas has been about around the $3 range for about the last year. So while it may seem like nothing has changed, inflation has gone up, but the price of fuel has stayed the same. So it actually has gone down in price a smidge, but you don't really see that when you're shopping every day. All right, next up, more awesome news. Amazon cancels orders. Walmart pulls forecast as tariffs take hold. We already touched on this a little bit. Amazon has abruptly canceled large merchandise orders from China and other Asian countries as President Trump's sweeping tariff hikes, now exceeding 100% on Chinese goods, rattled global supply chains. The move, which included items like beach chairs, scooters, and air conditioners. Beach chairs. Wow. Phew, that's really going to affect the U.S. Economy. Caught vendors off guard and is widely viewed as Amazon's attempt to reduce its exposure to the new tariffs. One longtime Amazon vendor who already manufactured $500,000 worth of beach chairs, hey, must be some good stuff, received an abrupt cancellation notice with no mention of tariffs. It was the first such cancellation they've ever experienced. This reflects the growing uncertainty suppliers now face as Amazon's primary vendor base remains heavily concentrated in China. Well, if you are an American company and you're selling things that you source your goods from China, you might want to look domestically. You probably, well, it's probably gonna be more, expensive, but in the end, it might help save you a few bucks. Meanwhile, Walmart has also responded to the intensifying trade war by scrapping its first quarter 2025 operating income guidance. While the company maintained its sales growth forecast, it cited an unfavorable product mix, higher expense claims, and the need to remain flexible on pricing as key reasons for widened range of potential outcomes. Let's see here. In March, Walmart reportedly asked Chinese suppliers to absorb tariff costs to maintain competitive pricing, signaling it's struggling to preserve its low-price business model amid rising import costs. Both Amazon and Walmart's actions offer early signs of wider disruption in the retail sector as import costs surge. Supply chain platform Sayara confirms that both retail and giants rely heavily on Chinese and broader Asian suppliers, most of whom are now subject to steep tariffs. As global trade tensions deepen, domestic producers may benefit while import-heavy retailers brace for operational and pricing turmoil. The ripple effects could soon spread across the broader economy. Probably will, but all right. This is a little funny. Like I mentioned earlier, the market just rallied for out of no reason. Well, it wasn't no reason. I mean, they paused the tariffs, but nothing really changed. So this last article here is just kind of funny. Goldman calls U.S. recession at 12:57 p.m. 73 minutes later, rescinds the recession call. Again, don't get ahead of your skis. I was doing some adjustments for my youngest son and some little things I do for myself. And I looked over, I'm like, where'd all this money come from in my clients' accounts? I was like, oh, everything jumped. So I thought I'd placed a trade incorrectly and had screwed something up. So, all right. Wall Street's panic over a looming recession didn't last long, just 73 minutes to be exact, after a flurry of apocalyptic research reports from big banks predicting that President Trump's aggressive tariffs would tank the economy. Goldman Sachs made it official. At 12:57, chief economist Jan Hatzius declared a recession as the firm's new base case. But barely over an hour later, Trump blew up that narrative by announcing a 90-day pause on reciprocal tariffs for most countries, excluding China, allowing time for trade negotiations. Goldman immediately reversed course at 2:10 p.m. I assume that's Eastern time. Hatzius issued a second note titled, President Trump announces 90-day pause, reverting to our previous non-recession baseline, end quote. Just like that, the recession prediction vanished. Poof. The flip-flop underscores how quickly Wall Street reacts and overreacts to Trump's negotiation tactics. This mirrors the last trade war cycle where Trump would escalate, market would panic, and then he'd ease off just enough to calm nerves. It's a familiar pattern. Now all eyes are rest on Wall Street's penguin crew to see how quickly they follow suit in reversing their bearish calls. For now, the first official recession call is already in the rearview mirror. Funny days. All right. Well, that's everything that I had to cover for today. So if anyone needs to reach me, where do you go? Wait for it. DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be happy to help. All right. Well, that's everything that I wanted to cover for today. Tip of the day, just with some stuff I'm dealing with in my personal and family life. Get your estate plans done, people. Because when you are about to die and haven't done your estate planning, it makes what your kids have to deal with, me and my little brother, a big pain in the butt. So my dad can't hear this. He's unconscious and probably not going to be alive by the end of the week. but he left a gigantic mess. And I've only been in this business for 19 years and harped on him about all that stuff. So this is my end of show message. Well, if you're looking down from, or up from somewhere hot later on when in the future, Dad, you left us with a big pain in the ass. So, all right. Well, hope everyone out there has a great evening. Me and Jake are going to go play some ball time. Right, Jake? Yes. We're going to go outside and hope everyone has a great night. Adios.